Manual accounting systems. In manual accounting, the organization maintains separate physical books to record all transactions in the daybook and manually posts them in the ledger. All these things require a lot of manpower. While posting, a person needs to use all his concentration and put in a lot of efforts. Otherwise, mistakes will take place and the trial balance will not tally. Even if it tallies, posting might be done in the wrong ledger account and financial statements will not be correct. To overcome all the above issues, computerized accounting systems were developed. Computerized accounting systems. In a computerized accounting system, you need to create all the ledgers and enter opening balance only once in the beginning. In subsequent years, you do not need to create the ledgers again or carry forward the balance of the previous year as opening balances of the next year. This activity is automatically done by the software. While creating new ledger accounts, you are required to classify them suitably under relevant account groups. This will inform the software about the nature of the ledger and where it will appear. That is, whether it comes under assets, liabilities, expenses, income. In a computerized system, once the ledger accounts are created, when you enter a transaction, the software automatically posts it in the respective ledger accounts and the financial statements are ready instantly. Difference between manual and computer accounting. Manual accounting, computerized accounting. Method of recording. In a manual accounting system, physical journals and ledgers are used for keeping records of transactions. In a computerized accounting system, computers and accounting software are used for keeping digital records of transactions. Method of calculation. All calculations are done manually. Here, operators record the transactions manually in a database on a computer. All calculations are done by the computer system. There is no need to calculate the balance of each account. It is automatically calculated by the system. Ledger posting. In manual accounting, the journal is manually checked and then figures are transferred to the debit or credit side of related accounts through manual posting. Computerized accounting systems automatically process input data and create all the ledgers because voucher entries are passed under the respective ledger accounts. Trial balance. The information regarding the balances of all accounts in the ledger is collected and the trial balance is prepared manually. A computerized accounting system prepares the trial balance automatically without requiring any manual efforts. Financial statements. Financial statements are prepared manually by carefully transferring the figures from the trial balance to the income statement and balance sheet. The system generates all periodic financial statements as and when required.